Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host to the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So today I want to talk about the changing mood. The market's been rallying for about 3 weeks now, and we're on our fourth week of the rally. And I think some of the charts are starting to change, and they're showing a little bit more optimism. So that's what I want to feature today on the Market Buzz. So we're starting to see a divergence between indexes, whereas the Dow Jones Industrial Average is actually moving above its 200-day moving average. The S&P 500 is about halfway between where the Nasdaq 100 is and the Dow 30 is. So there's a discrepancy. But what's been happening prior to this was they were all making lower lows together. Now we're starting to see some change here in the mood where some of the stocks are starting to push higher and make higher lows and higher highs. And some of the names like Microsoft and Amazon, Meta, and Alphabet that all made new lows last week are actually trying to bounce off that area of support for the second time here. And their momentum indicator, their MACD or PPO, is actually making higher lows. So perhaps that could work out. We're starting to see some changes in the currency charts, and I want to make a big deal about that, and there's a reason specifically for it, but I'll show that to you on the charts. And then the bond charts have not started the change yet, so it's still too early to call this over and out and we get to go on a big bull market, but we're definitely finding some of the charts that are pushing harder and trying. So if you're interested in the work we do over at Osprey Strategic, I'd invite you to head over to the homepage there, and you can look at all our work. Anything over the last couple of years is all sitting there. For one month is only $7. If you're interested, that at least gives you a chance to see what you want to look at there. And we have annual packages at $8.60, which I think is a pretty good deal. But the main thing I want to cover off is I'm going to show you a little snippet about the type of work we do and how that might help you get positioned in the market. So if you're interested, you'll get a newsletter each week, a video each week. You get some trade setups every day and a monthly recorded conference call. I think we're starting to find people migrating towards the PLUMB system that we created. And what was the PLUMB system? Well, it was created to try and help people understand a little bit more about the way we work at Osprey Strategic. And so we call it pick load up down here at the stock market and take it as long as you can and make bank at the top. So PLUMB, the PLUMB system. And again, what happens is on the first week, if the market breaks down quickly, you're probably going to lose some money. But if it keeps going, you're okay. And so coming out of the lows, my trading account was up 6%, then the next week 8%, and then not 8% on top of the 6, but a running total from the start of the breakout. So here we are at the end of 3 weeks, so it's up 12%, and we're continuing to move on as we head into 4 weeks. And 2 to 3 weeks, you're going to make a little bit of money, but probably not going to change the world. At 4 weeks, you start to make some real money, and at 5 weeks, you probably need a bigger truck, and then you back it up and you unload when the market starts to soften, and then we go back and we reset this process. So it's been working. I think this imagery has helped people understand a little bit more about what we're trying to do. And again, we want to be in the market when the market is in an uptrend, and we just want to step aside and let somebody else own them when the market's in a downtrend. And then we use the Schnell strength indexes to try and get back in near the lows. I think the system, I find it works pretty well. I find it profitable. But anyway, in a tough year this year, I think it's performed pretty well. Okay, let's go check out some charts that I want to share today, and it's bigger picture stuff. I don't want to focus on, the 60-minute chart or something like that. I want to get into the larger periods, and what we need to focus on here Here's the year-to-date performance, and what we've got is our PPO is trying to move back above zero, and that's a good place to look. Now, if it fails here, that's a bigger problem, and my strength indexes are still nice and high, but we don't want to see them roll over. So as part of the daily setups every day, we share some commentary about what's going on with the strength indexes and how to manage that. But the important thing I wanted to say here is this is trying to turn up nicely right at this important juncture. And you can see we've got a downtrend line here. I could also draw another line over here just with a shallower slope, something like this. And what we'd like to see on that shallower slope line, obviously, is probably a test pullback and then a breakout over the next few days. And as that starts to work, that's going to be pretty important. So I think that's a real opportunity for us to kind of focus in on the charts at this particular time. Now, when I look at the S&P, so this is the SPY, the Nasdaq 100, and the Russell, what you can see is the S&P 500 is trying to get back above it, or trying to hold above the 50-day moving average, or in this case, the chart is a weekly chart, so it's the 10-week moving average. And you're trying to stay above that, so we're bouncing off that right now. You can see a little bit in the Zoom panels here, whereas the Nasdaq has not done that yet. So we want to make sure that it follows through and gets going to the upside. But if you look at the Russell and the S&P, and again, I'm recording this early Tuesday morning for Wednesday, playing on the StockCharts platform. But what we want to watch for here, obviously, is that if this can start to run and get going here, we'll probably watch the Nasdaq follow along. It might be a little later. It doesn't necessarily, those will be the big movers this time. What it does tell us is that the whole market is trying to lift. And it's this divergence or whatever that we've experienced. If all of a sudden we can start to get everything moving back up together, getting the large cap tech on board as well. Some of the charts coming up here show some significant volume and some reasons to think that might happen. So when we look at the S&P 500, the one thing I like to look at here, I put a couple of things on this chart. So one is the range from the COVID low to the S&P high back in January. That was a big move, right? That was 119%. I think we'd all agree that's a pretty incredible move back up. Well, if you put the Fibonacci retracement lines on here, what you see is right at the 50% level is where we bounced close enough for government work. This is 3491. This was 3503. So let's just call it a 3500 level. It's trying to bounce out of there. Now, when you look at the Fibonacci retracements from the last high in August to the pullback here, now this was a 20% slide. It's nothing to discount. It's a very big move down. Actually, I think on the S&P this might have been like a 15% move. But the idea being we come down, we make a lower low, and what's nice is we're making a bit of a higher low in momentum here. We're getting a PPO buy signal this week, so right here, right now, and again, that would have been a pretty nice place to get on board in July as the market started to run. And then you're starting to move up, and obviously if we got up against the 40-week moving average, then we'd have to watch. You'd also notice that the 61.8% retracement of this move, the smaller move, would be right at the 40-week moving average. It's amazing how all of a sudden this stuff starts to work out. I'm not a big fib guy, but I will say that the market is all set up here for trying to go higher. And I particularly like PPO trend lines. And one of the things that I like to put on here is this one. And you can see that we've got a large pocket, then a small pocket, and then we break out from that. A lot of times you'll see that on a typical stock, so to see it on an index so nicely laid out is pretty important. I think there's some real benefit here to just watching very closely. There's a real setup opportunity. What you see for 2022 was the PPO histogram was negative, this bumping in the background here. And that tells us the distance between the two lines. This stayed negative for the whole period up until the end of July. gave us a brief histogram pile, and then went back below zero. One of the things that Alexander Elder so eloquently put in his book, this is breaking the back of the bear. And then you're coming down, and on these lows here, you want to start to get involved. And then hopefully you can push up, and now we'll make a nice big histogram over here of a big bullish build. We obviously don't know the future, but what we want to watch for is that rotation out of this bear market into the bull market. And if this was to happen right here and right now, that would be really nice. Again, that goes back and fits with the picture of, trying to get on this truck and running it as long as possible. So if we can get out into this 5-week, 6-week period and make some real money, then what we're watching for is the market to be able to continue that expansion. And one of the things that the strength indexes help us with is understanding if the market's still got enough thrust to do that. So when we work through this is all set up for us, but let's just say that the S&P stalls here and then goes into a sideways wander and really can't get any rally going. Well, we'll know that right away, and so that way we can protect the profits that we've made. Now, when we get in on the Nasdaq here, there's a couple of interesting things that are starting to set up here. So the PPO is rated 0. If there was a place for it to turn around and get positive, it's very soon, really, really soon, because we're already below 0. And you can just see when the Nasdaq goes below 0 and your rate of change continues below 0, this is an 18-month rate of change. When you're down in negative territory, that's pretty ominous, and it's a good place to watch. But we're also down at a deep level already, and so when we come out of this and start to turn positive, we want to be more optimistic. Now, on a long-term timeline, the monthly Nasdaq Composite, just to stretch this out, doesn't spend a lot of time below 0, right? So here we were back in 91, and we had a big, long, downsloping PPO trend line for 6 years, broke out of that, and went on a big bull run, then came down and fell below. What we're watching for now is this reset at 0 and a turn higher. And again, you don't, it's hard when we're always thinking such short-term time frames. But what we want to see are these long-term charts hold up, and the PPO is right at 0. Now, the reason I want to cover this off today, we're starting to get that S&P 500, the PPO is starting to turn up on that, right? We're getting a buy signal there. So when we look at the Nasdaq Composite, we haven't quite got a buy signal yet, but we do have a higher low in momentum on this second set of lows here. So price actually is the closing price. It's really important to focus on the close. So here's one close here, that little dash sideways. Here's another one, clearly lower, but what we have on the momentum indicator is a higher low. So the momentum, we call that a divergence. In this case, it's a positive divergence because the momentum wave is already improving while price is still getting worse. What we'd like to see is that turn and rotate. If this was to start to break higher here, and again, I've got this little short trend line in here on my PPO, but I could also just remove that and go with something like this off the peak. This is when our bear market started. We come down, we have this huge pocket, then a little tightening up, and then we come down and make this little pocket, and then we turn and burn higher. That's a pretty nice setup. So rather than being too negative here, we probably want to just make sure that we're watching this, and I'm just going to remove this box, that we're watching this for the proper setup. So has everything returned to normal? No, but we're getting all the signs that this could actually be a meaningful rotation point back into the markets. Now, again, hindsight makes things a lot easier. We don't have that yet. But when we get this market turn, and again, look at this here. This is back-to-back weeks of volume extremes seen at the COVID low. So if you go back and you look during COVID, the market was very scared, obviously. Oh, yeah, we were going to go into a big recession and all that kind of stuff. And then all of the governments around the world started to print money and just, everything they had trouble doing before, they had no trouble doing. So all of a sudden, we had these huge volumes. Well, guess what? We hit 6 billion back-to-back weeks. And to me, it's not huge above the other highs that we've had here during COVID or during the 2022 downtrend. But one of the interesting parts is that these spikes are probably 10 or 15% below these 2 weeks back to back. And it's that change in character where all of a sudden, we're really starting to get some capitulation selling. So as the market tried to go higher, then we turn around and we reverse quickly and really give this big down candle. Anybody who wants to sell is forced to kind of think about getting out of their trade. Again, Microsoft and Amazon, Meta and Alphabet all made new lows, so that scares everybody. But we make new lows, and then what happens is the market runs out of sellers and everybody just says, I'm going to hold from here forward. And after this big push down, then you start to see the market work its way higher. If all of a sudden we can break this downtrend line, then it's a gradual set of steps. So then we start to make a higher high and then a higher low, and then we break through our 40-week moving average and we move up and eventually start to change the shape of the chart. But it all starts to happen here, and I do like this volume exhaustion, again, back-to-back weeks at very high levels. So if you think, the majority of time here in September and October, even though we were downtrending, let's pick 4.75 or something like that for the average over those 5 weeks, then all of a sudden we jump up and put in almost 6 billion shares a week. It's that kind of volume change during this downtrend that makes me think we might have actually made a meaningful low. Now, looking in on the New York Composite, so again, I want to explain why we use these different indexes. When you're looking at the Nasdaq, that's kind of a technology-related play, but when you're looking at the New York Stock Exchange, you tend to have more of the old institutional railroads and financials and energy companies. So you want to make sure you're aware of what's moving well. What we see on the New York Composite is our PPO is getting right down to the zero level where it bottomed in 2020 and where it bottomed in 2016 and where it bottomed in 2012. And what we want to make sure of is if this is the low, then we come down here and we start to turn and burn higher, and we're going to start to see different sectors start to lead us out of this hole. And to me, that's a very bullish sign. So as we watch for that to happen, here's our New York Composite. Zoomed in, and again, zone of interest here from 2016, 2020, and now it's short cycled. Normally it's every 4 years. You can see 2012 back here, but we're in a half cycle and it looks like it wants to turn and rise up. So we'll find out if that works out or if we do fail and we end up rolling down here. I don't know the future. I only know that the price action right here is a very interesting place, which typically when we get this weak in momentum, we finally find a bottom and then we can turn and work our way higher. On the weekly chart, I really like this. This is a big thing for me. So when I go back and I look at a lot of my charts historically, it's amazing the number of times where you could draw a trend line across the momentum indicator. And as that started to break out, even though it's nowhere near its highs, as that starts to break out, that gives us a real clue that the momentum is in fact changing, and we want to be aware of that. So this may run up, pull back, and on this make a higher low. This might even make a lower low. We don't know. But what we'd like to see, obviously, is that this starts to run up and goes on a big long run like it did in here. We'd like to be invested for that cycle. And as it starts to head up and run out the gate, then we're involved in the market and we're making money. And then when that rollover starts to happen where we lose our momentum, then we want to step aside. And, you know, in that pickup truck model, we just wait for the market momentum to start to improve again, and then we reinvest and try not to live through the losses and only ride the gains. So when I have the, whoops, not that one. When I look at the IWM, the Russell 2000 ETF, you can see a horizontal resistance layer here in February, March of 2020. And now what you see is that's been support twice. And we're right up against the 40-week moving average. That's been resistance all the way through. Now, the Russell has just started to outperform the S&P 500 for the first time all year. And I don't really like to use the Russell as a guideline to help figure out when this market change is going to happen. We did see it in late 2020 after the virus, after the vaccines came out, that the Russell went on a sudden surge. It outperformed the S&P 500 meaningfully for a period of time. So we're starting to see a little bit of it. And I don't get so excited about that. What gets me more excited is that big downtrend wave on the PPO broke on the June-July lows and is now making a higher low as we try to get through this 40-week moving average. So all of a sudden, if this is going to pop into positive territory, that's a pretty nice place to be long the market. And again, if the New York and the S&P 500 all start to break their PPO trend lines, I'd get much more excited that the overall rally has enough strength to get going. So we're starting to see the characteristics that we'd like. And again, we're, this was 162 at the lows, 180 right now. You're sitting in a small range, let's call it 10%. So you're waiting 4 or 5 weeks here to see if it can get going. And if all of a sudden, as this starts to break out to the upside, we can start to make some real money. That would be helpful. And again, we need to be in the market when the market's moving higher. And in order to do that, we want to watch for the positive indications to start to show up. So I really like the fact that this higher low is in place and the market looks like it's got a little bit of structure to try and do that. Now, in the opening commentary, I mentioned that the currencies are starting to make some changes. And one of the big changes is on the US dollar. So we have this potential reversal bar that showed up 6 weeks ago. And then we made a higher close in here, but not a higher high on price. So the close was higher than the prior closes. But now we clearly seem to be breaking down on the dollar. It's not quite that clear, but I would say we're sitting on the big trend line now for the dollar. Our PPO trend line, remember that one that has been engaged for the Russell and for the New York average and the S&P 500, those are all looking like they want to start to break. Well, what we see here is on the PPO for the US dollar literally turned up at the beginning of the year, January, February timeframe, and went on a run. And it's, the market's really broken out from the, I'll call it November highs. And then once it started to break out, that was a pretty meaningful change for the charts. And now we've got this 2-year trend line on the US dollar. And if that was to start to break down, that would be something different. Now what I want to show you is this one interesting calculation. This is Martin Pring's Special K. And Martin does some fabulous work that takes multiple time frames of influence, puts it in a single indicator, and lets it run. And one of the things about the Special K indicator is that when you draw a line under and that Special K starts to change or break down, it can be really helpful as an indicator for long-term trend change. Now, we could obviously draw a trend line under here, and that was pretty meaningful when the dollar started to break down in 2020. And then we had a big trend line down here, and sure enough, the bottom on this was the bottom on the dollar. We bounced around for a bit, finally started to break up to the upside, came through this red line. And as we got through, we've been on a US dollar bull market since the middle of 2021. And now if we were to start ending that, that would be cool. Well, guess what? We're breaking the trend line on price up here. We're breaking the trend line on the Special K. And the fact that we're so far away from the moving average suggests to me that the dollar will probably move sideways until this moving average catches up with it. That's just a hunch. But anyway, all of that seems to work together. We're starting to see these changes on the dollar. They're really starting to add up nicely. And just to wrap that into a nice bundle, here's the euro on the daily. And again, the euro's opposite correlation to the dollar. But what we see here is the euro starting to break its big downtrend and move to the upside. And look what the DAX is doing. The German stock market is breaking its downtrend and starting to move to the upside. So all of these things are starting to happen. It makes me think that we're in a better place, and as I call it, a changing mood. If you'd like more information, head over to Osprey Strategic and check out what we have to offer. Thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks for joining me. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.